Okay, congratulations everyone that this gold trade from 1,900 to 1,980. And I always tell you guys, this market are sweet and especially gold. Gold has been trending perfectly well on the Telegram channel. I dropped this update, and I believe a lot of people don't know or can't say or like did not use what I dropped. Like 21 days ago, that was June 27th. If you go back to the channel, you see where I dropped this update. And I said, now let me give the next projection on gold. Once we get to 1,900 area, which was the bottom, gold should do a 1,000 piece bounce to the next major resistance at 1,980. We just completed our phase, liquidating everybody. Liquidating everyone at 19 from 1,970 area. Where is it? 1,970 area. All these ones, what you see here, are liquidity. They are all liquidity. So whenever you see things build up like this, know that they are liquidity that will be taken someday. And I usually tell you guys that this market is built on liquidity. So everybody that has been shorting gold from 1917 area, all those, we're having those period of last month from June, I think from June 5th. From those June period, you are like from June 5th all the way to June 27th, I think June 16th, like to June 16th, you were seeing all these, we were here and we were seeing all these was what they call it, resistance, minor resistance. Trust me, the market always builds something down. If you don't follow this liquidity concept, you will be taken out. So there was liquidity there. All this, I call all these guys liquidity. If I should take this up, are you getting me? So I just want to run a quick update for you and to tell you what next and where we are right now. So if I can quickly take this up. So to complete this part, I said liquidating everyone 97 that has been selling but didn't take profit before knowing it will either do a head and shoulder pattern to continue to the upside or break down to 1800. Now, see where we are right now. So this guy is liquidity. All these guys have been liquidated because a lot of people might just put their stop loss above it. So the market has taken liquidity right now. So what next? What next? And the question is what next? For you to know what next, let me tell you what next. So from the bottom, we're doing a falling wedge. A falling wedge is a bullish continuation pattern. Are you getting this? And we're testing that bullish continuation pattern to continue to the upside. But that question, what next? I want to show you right now. If you are truly a trader or a professional trader, you should know this. Pause a little for 5 seconds. I'm pausing for 5 seconds. What do you think is next? What can you see as a trader right now? This liquidity will have been taken. What can you see right now? 1, 2, 3, 4, 5. Okay, let me tell you what next. If you're a trader and you don't have a proper education, you just enjoy yourself in trading because you will wallow in, questions, what next, what is happening, where should I go, should I buy or should I sell, what next, what to do from this place, should I buy from you because of this candle I'm saying? No, don't buy. Let me tell you what next. Because from what I'm seeing here right now, it is a bullish continuation to the upside, which I told you before that gold is about doing a 1,000 pip, 11,000 pips to the upside to 2050 back to this support because we were able to break back into this. Now, the question you're asking that what next is about to be answered right now. So this was the risk to reward the gold trade we have. As you can see, done about 800 pips already. The question is what next? Now, let me analyze so that this video will not be too long. We're on a descending wedge, which is a bullish continuation pattern. Are you getting it? And as you can see on the hourly chart, when we got to this major area of value, so if I should take all these things off, let me go back. Remember the month of 22nd of March 2023, that's when this whole market update started from, like the after breaking structure. This was where the whole upside started from. So I was waiting for this particular, support to hold. But what did I tell you about gold? If you have been following my videos, I said gold does only three things: either a W pattern, these two things, sorry, either give us a W pattern or an M what pattern. It might come with a fake out. Don't get carried away. It might come with a fake out. Mostly gold does all these fake outs to take, are you getting it? To take liquidity. Gold loves what? Liquidity. So if I should further continue, you'll see that gold has been doing the same thing I've been telling you. Are you getting it? Did the liquidity, we came down, then we did liquidity again, we came down. Are you getting it? It's there. This was an equal double bottom. So if I should show you well, it's simple. Just look for this at your major areas of value. You will see that you will be right at least 100% of the time. So before even we got to 1,900, I was expecting liquidity concept, and it happened. And what's liquidity concept? Now, before I even bring that liquidity concept right now, look at, what can you see? W pattern. Just W and M pattern. So just be looking for all these W pattern, this like wide areas like this, to either sell from or buy from. It's there everywhere. It's there. Yes, it's there. Go to last 2 years. Gold has a behavior. Look at it. It's there. This is the behavior of gold. Are you seeing the behavior? So before you can, and start trading an asset, this is even like 2022. It's there. Are you getting it? Before you start trading an asset, first of all, understand the behavioral pattern of that asset. I've just given you an expo right now that gold does one of these two things, W or M pattern. So whenever you are saying this, are you getting it? You should know that gold wants to do a joker. Now, why did I believe that we might reverse from 1,900? Because we broke down from a very important support and resistance. Some assets will just continue from here. But I know gold for doing something, taking its time all the way from June 21st, are you getting it, to do a head and shoulders pattern. Are you getting it? To liquidate everybody, because right now a lot of people see this as a break of structure because we're broken down from a major support level. I know gold, not just, a lot of people have been shorting this market all the way from here, thinking that gold will just continue with going to the downside. But trust me, when gold wants to, wicked people, this is what it will do. But I was looking for a way like, okay, if this is truly a break of structure, I don't want to see anything like a head and shoulders pattern or a W pattern. Are you getting it? Because whatever you're seeing here right now is a W, is a what's it called? So an inverse head and shoulders pattern, which broke out from a bullish falling wedge, which also brought about a bullish head and shoulders pattern, which has now broken with a very big break. And what I tell you about price action, the market needs to be sluggish if it truly wants to reverse to the upside. Are you getting it? Now, let me come again on a daily so that it will be clearer to you. If this is truly a, what's it called? If this is truly a continuation to the upside when this market was coming down, if this was truly a breakdown to the downside, sorry, let me use that word. It was really a breakdown to the downside, coming back to this major area of value, then we wouldn't have gotten all the way from 3rd of March, we wouldn't have gotten this sluggish price action. You can see how sluggish it was all the way from 18th of May to all the way to 19th of June. 1 month, it was consolidating for over 1 month before breaking down, consolidating for over 1 month again. So this is sluggishness. So whenever you see a break of structure and you are seeing this sluggishness happen, just find a sharp pattern to it. Are you getting it? Because the market will do or definitely reverse from 0.5 or 0.618 Q zone, which we perfectly reversed from. I called 0.5 to 0.618 my Q zone. Because if we reverse from here, sniper entry, we've entered from 1900, these 800 pips we've gotten today. I get it. So from the higher time frame perspective is what we have. And if we have this from a higher time frame perspective, and I know I told you something when we got here, like if anything that makes us break 1940, anything that makes us to break 1940, are you getting into the upside? Take a trade if you have not entered from here already, because the market has done what? Broken back into this previous support that broke down, that turned resistance over how many weeks. Now, since we've broken back into it, take a trade, put your stop loss on there, calculate your risk and money management into it, even though it's 400 pips. Are you getting it? You're using one lot, your stop loss you've calculated for yourself is probably 100 pips you've been using before, and you're using one lot. Divide that 4 lots into in that 400 that 100 pips into 400 pips, which will reduce your entry back from one lot to 0.25 lot size. That way you can be able to follow this move you've seen here. Now I've got to 800 pips. Are we going to the upside? Are you supposed to start buying from here? No. Let me tell you why. Now, let's go back to the 4-hourly chart. I love 4-hourly structures. 4-hourly structures are just too perfect to trade any market, especially gold, Euro, USD, and the rest of them. So right now, since we've broken down out from a falling wedge, number one, we've confirmed a breakout back into, you know what we do? A break back into our previous support, now turn resistance. Now we've broken back into that previous support right now. But look at this. There is a gap. I don't like seeing all this gap. Even though it's small, there is a gap. Why didn't you feel it? That's what brings us back to the final stage of what next. Now, what next? I counted 1, 2, 3, 4, 5. Could you see anything? You said no. Or you might said yes. But that thing is called an Elliott wave. The market moves in waves. 1, 2, 3, 4, 5. Now that we have an Elliott wave 1, 2, 3, 4, 5, that's to tell you that this market has resumed an uptrend to the next higher high of 2,000, our previous high, 2,050 to $2,060 area. Now, what next? After an Elliott wave 1, 2, 3, 4, 5 to a major resistance zone, what are you supposed to look for? Let me tell you. An ABC correction. Look at what do you see here? After an Elliott wave 1, 2, 3 impulse. Now, an Elliott wave is an impulsive move. Before I come back here to ABC, let me start an Elliott wave for you again. My students know this, my mentees know this. An Elliott wave is the rules of an Elliott wave is 1, 2 cannot go below 1. So if I brought this down, 2 cannot go below 1. 2, 3 must break a previous support or resistance. You see, 3 broke this broke. It must break a structure. So this was a previous resistance, now broken and turned to support. 4 cannot go below 1, right? Then 5, whereby 3 must not be the shortest. Should I come again, or let me go to probably here? Low supply and demand. I was teaching one of my what's it called, students. So right now, let me give you laws of Elliott Wave. Let's see if we can get Elliott Wave theory. That's the Elliott Wave theory. When I'm coming. Look at the Elliott Wave theory is a technical analysis of price pattern. The Elliott Wave theory is a technical analysis of price pattern related to changes in investor sentiment and psychology. Theory identify impulse wave that establish a pattern and corrective wave that oppose the legend. Now look at this image. Does this look familiar to you? 1, 2, 3, 4, 5. Now we need an A, B, C move to the downside, where C will definitely come a bit below 4 to take some liquidities before continuing this move to the downside, to the upside. So if I can probably enter into here, Elliott Wave, what it is and how it's used. Let's see if we can get the rules. I need the rules. Where are the rules? Where are the rules? Hold on. I'm trying to get the rules. Rules. Yeah, oh god, this video is going to get long, sorry. Elliott Wave, yeah, blah, 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 blah. I'm coming. The Elliott Wave, I'm coming. I'm trying to get the rules. The rules of 1, 2, 3, 4, 5. Okay, look at now. Label 1, 2, 3, 4, 5. Look at now. Wave 2 cannot retrace more than 100% of first wave. That's this one I said. Cannot retrace more than 100% of first wave. Then the third wave can never be the shortest of 1, 2, 3, 4, 5. The third wave, as you can see, cannot be the shortest, cannot be shorter than this. Anyone can be longer, but at least it should not be the shortest. It should be the longest, or at least 5 can be long, 1 can be long, but 3 must be longer than one of those waves. So 1, 2, 3, 4, 5. 3 always break a structure. That's what I added on my own side. Wave 4 cannot go beyond the third wave at any time. Are you getting it? Now look at it. Wave 4 cannot go beyond the third wave at any time. Cannot go beyond 1. This 4 cannot come below 1. That's invalid Elliott Wave theory. Are you getting it? Then 5 close at a major resistance zone. Now the question is, what next? What next is what you are seeing here right now, a corrective move, a corrective phase, which is a retracement. Are you getting? So this is 1, 2, 3, 4, 5, then A, B, C. Now let me show you something now conclusively. An ABC move corrective wave needs to start, which is 1. Can be 1, 2. So the next couple of days or a week or two, you can have this correcting to the downside, liquidating everybody. So if I should expand this so that you can see very well, I told you that we'll have a gap underneath here. This market reversed from 1946 because it wants to correct to the downside to take liquidity. Liquidating everybody, coming back to 1940, 1930 to 1940 support area. Are you getting it? And start another Elliott Wave again. Are you getting it? So it will start another Elliott Wave again, an Elliott Wave theory to the upside again by doing 1. Are you getting it? 2. Remember, 2 cannot come below 1. 3 always break a major structure, which is this major resistance gets broken. Then 4 can retest that major structure. Then we go to 5. So whatever you are seeing here right now is what I'm expecting on Elliott Wave, the next one coming. So don't hit yourself if you've not taken any trade, because it's just about to get interesting, and this is what's going to happen all the way to this resistance before we can get a major corrective ABC move to the downside. Is either we'll continue breaking up or We'll correct ABC again to this downside to 90-80 area before continuing. And when you see this next move coming and you see this A breaking below 4, are you getting it? And the B is correct, not correcting above here, just know that we are in for a major corrective move to the downside. So the price action stays that if I should take all these things off, the price action of this next Elliott wave, watch out. Very, very important. The price action, I can take a trade now from 1976 and put 100 pips or 150 pips stop loss above 1980. If it goes wrong, no problem, but that's counter trading. I don't like counter trading. I usually wait for my next support. So this is just coming from whatever you're saying here. Are you getting the corrective wave? Corrective wave called diagonal wave consists of three or a combination of three sub-waves that make net movement in the direction opposite. When I made these, what's it called? Hold on. Come. When I made this, let me look for it. This particular thing we're talking about since right now, I have made it ever since. Remember what I said, major demand zone, waiting for a major resistance break above, a major break and resistance to enter a buy from 1940 to 2050, 1,100 pips, or you can be translated to 11,000 pips. Now, this is not what I wanted to show you. I believe a lot of people have seen that have entered this for a very, very long time. If you go to my November pictures, you will see that I've drawn how gold will move down, move all the way from January, February, and I've drawn this. I think this picture, at least go and check the date and timestamp. You will see this image where I said 1, 2, 3, 4, 5, then a corrective bounce to the downside, A, B, C to the downside, then start on that leg again. 1, 2, 3, always break 4, 5, bigger Elliott wave on the higher time frame. And check this out. What can you see? According to plan. So I will not come back here. I will just, upload this video for you guys to see, so that go back and search, you see everything happening here. I have already drawn this down since February or March, I think, or such. And I drew it again this month. I think, no, I drew it again. I think I drew this again and uploaded on 27th of June. And I've been following this wave because the market moves in wave. If you can recognize the wave, that is millions of dollars for you. You will not be worrying yourself at any time, because everything you'll be seeing then is just analysis upon analysis, getting all this sorted out, waiting for your price action pattern to break bearish pressure trend line, which was broken and retested and went to the upside. So everything has been happening perfectly well. Gold has been one of the assets that has been trending perfectly well for me, and I love what I just saw, because even on the lower time frame, on the 1 hourly chart, on this particular day, I told you that the market might have resumed, but I want to see that pressure, because it was been giving you signal. Give you an Elliott wave, broke and continued, which broke out of this Elliott, what's it called? Descending falling wedge, and we tested and even went fast, coming back down. Anything that makes us break below here or below here, this trade has been validated, which perfectly, if you have entered from 1913 and taken that trade to 1940, or you left it to 1980, which would have been 400 to 800 pips on the upside. Are you getting it? So don't get carried away when you're trading. Keep your analysis simple. Keep your chart simple. So conclusively, this is what I'm expecting. I'll leave here to my next one where I'm doing the analysis right now. This is what I'm expecting for gold. What I'm expecting for gold right now is a corrective bounce. If it does not give me that corrective bounce and break above here, sorry, and retest this broken structure, I will enter. Because it might go to $2,000, come back. The second case scenario right now, gold is an asset that don't wait for anyone. It might not do this Elliott wave corrective bounce back to here. All you should know is that Once it breaks, it has broken your, it has broken this 1940, broken back into this previous, range of support that has broken back right now. So it might just continue like NASDAQ. Go and look for my NASDAQ video. NASDAQ has been very cheap. Kudos to NASDAQ. All the way from 11,600 to 15,700 right now. That's 4,000, over 40,000 pips or 4,000 pips, anyhow you put it. 4,100 pips. Huge, 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 huge. I would love us to do an Elliott Wave corrective move back to 1940 area, take all these guys out, then we'll do another move to the upside again. I would like this discount because right now the market is at a premium zone. Are you getting it? So I would not like to buy from this area and put over 800 pips in play, as in over 400 pips in play. Or if I'm seeing a break above, I even said it in one of my videos that if this is not going to give me an entry and it breaks, I'll wait for the retest, which I took some aggressive trades from this particular place and I made all the money I was supposed to make all the way from here. I can upload that trade for you to see. I guess. And so this is what I have for you on gold, but I would love to see this corrective bounce, ABC corrective bounce, but it does not do an Elliott wave. If it breaks to the upside, are you getting it? No problem. So this is a previous level of resistance. Now we found the resistance again. If it breaks above and turns into support, no problem. We'll enter an entry from 1980, put my stop loss below 1950. Sorry, 19, what's it called? 19, probably 1980 to 1960, 200 pips. So I'll put maybe 200 pips to the downside. Are you getting it? But overall right now, look at this. Look out for this. Let me show you something you look out for. In case you want to trend this market and you are confused as to what this Elliott wave is going to do. So look at this. This was a broken what? This was a resistance that's broken right now. So watch out for this. We might come back down here. Are you getting it? Once you are seeing us bouncing down here, are you getting, you can enter from 1960 or 1965 area, $65 area, take probably 1975 out of it. Are you getting it? 100 pips and leave. Then if it does not break above, if it does a joker and do that corrective bounce to the downside, no problem. You know you have taken 100 pips. But always know that this is an area of resistance. So until it breaks above very well, or continue breaking above very well, using turning here to a previous resistance, not turning it to support, are you getting it? Then you breaks above very well, come back, enter 1980, put a 200 pips to 1960, are you getting it? Put a 200 pips to 1960, enter, and leave that market until it gets to where our next major resistance, which is up there. So if I should put a trade to that, a buy stop order on that particular part after, or not a buy stop, you should wait for it to happen first. So 1980, I guess in it, 1960, and taking the market to 2050 back. That's another 4:2. So from 1980 to 2050, 50 is 500 pips. 80, that's on that 700 pips to the upside. Are you getting it? Risking probably 1980 to 9200 pips to the downside. So if you're using a one load, you might be risking $2,000 to make about $7,000. Are you getting? That's what I have. So I have taken this trade all the way. I have a very, very sweet conservative entry which I took from 1900. I guess in it 1900, and it's a swing trade but it's small, and I put my stop loss at 1970. Yes, I think 1970, I think so. 1980, sorry, 980, and I took that trade the way to 2050. So I'll be leaving that trade to run until we get here, which I told you that we're getting 1100 pips from. So this is what I have right now. the market cannot just continue going up without doing a retracement. So I'm expecting a retracement to the downside from here. Retrace and pick up again. Take this market to this upside. This is what I have for you. My name still remains Vision X. And the market, gold market is so sweet. I carved it out from our dollar market because I was expecting this drop-based drop before continuing to the upside, because weekly of dollar has been very, very predictable. So if you are not seeing this on the weekly in dollar, you have been blind all this while. So trading has been very easy for us to analyze at Vision X because we know what we are doing at Vision X because of this. So conclusively, this is good. If I can do USD, I will do it also. But know that this is a major area of resistance, and that is making you find your M pattern on probably the 1 hourly time frame again, because this market can always go like that. Is here now. So anything make you see an M pattern that breaks down. Are you getting it? You can use an Elliott Wave 1, 2, 3, 4, 5 back, then A, B, C, then Elliott Wave 1, 2, 3 breaks that structure, then 4 it is, then come back down. Are you getting it? Oh, sorry. M pattern 1, 2, 3, 4, 5. Don't just use your lower time frame to trend it up. Probably your 30 minutes time frame, your 15 minutes time frame will tell you what's up. The market always gives you time. It does not hurry you. It gives you time to take your trades. Are you getting it? It gives you time. So if you are on your higher time frame or 4 hourly time frame, like I always tell you, you would have seen this Elliott wave that happened 1, 2, 3 breaks the structure, then 4 could not even left a gap, and 5. So I'll not talk more. Let me not talk too much and just get this done for us. So let me just put this and snap it down. 1, 2, 3, 4, 5, and ABC move. A, B, C to the downside. I guess. So my network is misbehaving. Let me end this video here for now. I'm put on the channel for you guys to see that, I've been saying that gold has been very sweet, especially when you're trading the 4 time frame. You are risking proper risk, not risking $10, not risking 10 pips, 20 pips. Just try and have that at the back of your mind in gold, that gold is very volatile. I want to risk at least 100, 200 pips. 200 pips, just make sure you know what you're doing. You're seeing your structures probably well. Just put 200 pips and you see what you're seeing all this happening. Because you had put 200 pips at 1930 to your 200 pips stop loss at 1910. Probably the market wouldn't have come to 1910. Like if you have entered from here after seeing this head and shoulders pattern, if you have entered from here, probably put in here. Even let me show you something. Even don't let me not even sugarcoat anything here. Let me go to the lower time frame. How I was able to take this 1930 to $1925 area. God, my network is misbehaving. I would have shown you something. There was a continuation pattern inside this place. And that continuation pattern on the 15 minutes time frame, I think, was an ascending triangle. So my network is not loading. So I'll end this video here for now. Or can I reload? My network is not loading. Let me try and reload and see. I wanted to show you that thing because a lot of people are saying that, oh, we could not find an entry. There was an entry there, trust me. There was an entry there. Let me show you. Let me go to the 15 minutes time. There was an entry there. Don't tell me there's not an entry. It's because you don't know what price action is, or you didn't know what was happening in your market around this area. Let me show you the entry. How can you say you will not see an entry? What is this? What can you see? What is that? This is descent. This is an ascent triangle. Break. So it does not need to give you a retest on the lower time frame. The lower time frame does not respect structure. So how can you tell me there was not an entry there? Because even when this market was coming down, are you getting it? There was a small entry here. I can still go to maybe the 1 minute or the 3 minutes time frame to show you there was a small entry there. So how do you trend your market? Matters a lot. What are you looking at? Are you getting it? Look at, you even did a small falling wedge. Are you seeing it? When I took this trade that day, someone was asking me, this market was coming to the downside, broke back, gave us this, broke again, switched to the upside, did a small falling wedge, broke, retested that falling wedge addition fees, and continued trending before it gives us this joker, ascend triangle on the 15 minutes time frame. So the lower time frames, I know they are scary and they are, but if you have this full sense of what is happening on your 4 hourly chart and you transferred it to your 1 hourly chart, you transferred it to your 15-minute chart, how then are you not seeing what the market is doing? Because if you have all this overall in your head and you have this head and shoulders pattern, you would have known that this was an Elliott wave 1, 2, 3, 4, 5. We should know that 3 always breaks a structure. 4 cannot go below 1, 5. That's what I have for you for now. Take care. I'll try and upload this today so that I can send into the group. Use all this, apply that to your Euro USD, apply that to your pounds USD, apply that to your, it's clear now. Look at me. What do you see in here? I told you this before. What are you saying? This is Euro USD now. Are you saying ascending triangle that breaks? I said, just need to come and test that broken structure right now. Enter from 1.1000 our, what's it called? Take on that 500, 600 pips or 500 pips to this upside. Are you getting it? So this is what I'm waiting for Euro USD, pounds USD, same thing. Pounds USD, I'm waiting for a correction to the downside also. Pounds USD is now trending on this line. And there's something I've not been using recently. No, I'm not tending to it. I'll just trade structures. I'm waiting for a major structure. 1, 2, 3. Is that? No, I'll not do USD. I think NZUSD was what I just took just now. So what I'm looking at is, no, I've done your NZUSD video, so you guys can go and watch that. So I'll end this video here right now, and I'm just waiting for some sort of consolidations around this area. I get it. Give me my proper head and shoulders pattern on the file, the bigger one, so that it can tell me where this market is going to. So we're facing other consolidations again. You see how the market is moving now. Face in waves, face from one face to the other. Look at, I carry this one from here now, put it here. Perfect. So expect some kind of consolidations around here. I'm not even scared about taking a sell trade anymore. Expect some sort of consolidations around here, but we cannot break below 1930 to 1940. Are you getting? So as long as we're not breaking below it, I'll keep buying. So the trend is, my friend. I'll wait for a retracement buy. Wait for a retracement buy on my lower time frame. This is what I have for you right now. Gold has been very sweet, and I love gold. Any questions, you can contact me. Take care and bye for now. Bye bye.